And now it's just kind of
Yeah.
what happens and what do we do about it at this point? I mean, it's
I'm gonna be
today.
sitting down on the back patio and just with a nice glass of whiskey and enjoying the shows.
Yeah. I wish I could do that, but it's like 40 some degrees here today for a high and raining. I would love to do that, but I will be hunkered down probably on a couch. Came back from MBA and unfortunately have are one of the people that I have a lung issue coming back home. Not COVID, thank goodness, but got a cold. But it could be that it was 86 degrees, 2 weeks ago, and we've been sinking into the 20s in the morning, and it's just been the weirdest weather here. So I feel like that has had an impact for sure.
Definitely does.
Yeah. Hey, thanks everyone for joining us today. I'm Faith Howard Mooney, SVP of Member Engagement at TMC, and this is the last week in mortgage today. Today with me is Kelly Haney, who is the EVP of Capital Markets at Mortgage Financial Services. Thank you for doing this with me, Kelly.
Of course.
Kelly has come, today is election day. I'm sure all of you have seen that, like on your TVs, in your mailboxes, everywhere on yard signs. I'm sure everywhere that you possibly can. I voted this morning for the first time in years and years and years because I used to travel for business and so always voted early. Kelly did the opposite and is wearing this delightful flag shirt today for us. So,
Sure,
um,
we get the opportunity to celebrate. I mean, I did the early voting, and here's the best news after the best news after day is we can watch football and not have a political ad every 20 seconds. So
yeah, or watch anything
yeah.
as far as that goes. I was amazed. I had been out of town for, I don't know, 6 days and had not picked up my mail before I left town. So who knows? It was probably 2 weeks of mail for me. And I was shocked. I had a stack of stuff that I literally just threw away. It seems like a little bit of a waste of trees to me, but that's just how I bend. I don't pay much attention.
Yeah,
Who
yeah, and the
knows?
text messages. You're absolutely right. Yeah, it's kind of funny. I watch them come across, and it's like every now and then I'll play with them and say, "You've done no research on who I am," and it's usually the parties I don't agree with, and then they stop texting me when I say that. But I had some fun with a couple this year just because I get bored of
That is true. They kind of hit you from all angles. Well, thanks for doing this today. I'd love it, Kelly, if you just, give our audience a few words about mortgage financial services. And for those of you who are in the audience, as you know, we like comments coming back into us. So any of the things that we talk about, would love it if you do, as you usually do, share in the chat how you're feeling about the topics that we're talking about today. So Kelly, give us a few words about what you're doing over at Mortgage Financial Services.
Again, thanks for having me on, guys. Yeah, Mortgage Financial, we're an IMB lender. I kid people, we're kind of the SEC conference. We're based out of Texas, kind of lend in Texas east through Florida, Oklahoma, and Colorado just for fun. But we are IMB. We have a retail channel and a wholesale channel. One thing that I kid people that one of our missions is the affordability and achieving home ownerships, and we've done this in both our channels through some unique programming. Uh, I kid people, we're small IMB, like a lot of you on this call are, where, we're able to make these adjustments quickly in the market that we've been in without having to move the Titanic like the big people have to do. So that's a little bit about us in a nutshell. And like I said, I get the privilege of overseeing a lot of our capital markets, but also have my hands in a lot of our day-to-day business as an organization. So
Yeah, and your team is very engaged with us. You guys won the team award this year for TMC. So we are
we
always
appreciate that. What an honor.
Yeah, we're always happy to have you on with us. I thought we would start by talking a little bit about MBA annual, and then maybe move into some of the things that we think may or may not happen after today. You were not at MBA annual, but I know that you've got lots of really tight connections in the mortgage space, so I know you've talked to people about what was going on. One of the things that I just kind of wanted to get your take on, and I would love it if people in the audience chime in here. We're rolling into the end of the year. So there are always predictions that are made when you're at MBA annual. I think people kind of look forward to that. in October, there was a quote that came out from Mike Fratantoni that says, "We're bullish about the spring 2025 housing market. Mortgage rates at this level should support homebuyer demand and gradually reduce the lock-in effect, thereby increasing the inventory of existing homes and supporting higher purchase origination volume in 2025." I looked at that and I thought, well, that makes it sound like it's super simple. And we all know that it's a little bit more complicated than that. Are you on the side of the fence that you're optimistic about what the spring will bring? Where do you kind of land in that?
I definitely want to see the movement in the right direction. It's going to get tougher before it gets easier, in my opinion. I think the reality is a lot of consumers and buyers out there they've been on the fence. They're waiting to see the outcome of what happens based on this election. And the reality is we probably won't know this evening. So there's a lot of people waiting on that, and you've got two parties that have a completely different stance of how to improve the economy, how to improve housing. Uh, so I definitely think going into the last month and even the first quarter, we will start to see it. I think the economy reports have been fantastic. The Fed's meeting again, potentially about another 25 basis point reduction. But again, I think one of the biggest challenges that we are all struggling with is into the affordability piece. I mean, we could drop rates as low as we can, but affordability is still a key factor with the cost of everything going up. And so I think that's a factor that we're all going to have to really think about as we go into 2025, and how do we overcome that piece of it.
Yeah. Everybody pop into the chat. How are you feeling? These are the numbers that came out from MBA. Total mortgage origination volume increased to 2.3 trillion in 2025 from 1.79 trillion expected this year. And we all know that predictions, number one, there are various predictions out there. That's the one from the MBA. They usually aren't right. I, never rely on them. I don't think anybody else does either. And I think it's kind of a wait and see what happens. The good news is I think almost everybody feels like they will go up from this year. It's just a matter of how much and when that happens. So, thoughts on that volume level? Think that's realistic?
I think it is. I think people just got to get down. You still have a lot of mergers, acquisitions, and it's the strong are still here. So when I say that, I believe the good people of the business, the good lenders, the honest and doing business right are still there. I
Yeah.
think the people that jumped in the market for the quick cash, they're out of our way now. And so I do expect to see everybody to continue to increase their volume over the next year.
Yeah. I mean, I think that we are going to still continue to see mergers and acquisitions for sure. We've heard a few in just the last couple of weeks. The other thing that I saw while at MBA annual, which I think kind of signals maybe a change in people positioning their companies a little bit differently, is lots of transition of people in the mortgage space. Lots of people moving around to different companies. There was another one that was announced today that I was kind of surprised by. I feel like people are positioning themselves for maybe a different market, realigning some of their staff, and those types of things as we head into 2025. And that was not only from the mortgage lender side, but from the partner side of the business, different salespeople moving into different positions and that type of thing. Have you seen any of that with your friends in Texas and people that you
There's
know?
a
I'm
lot of
sure you
change.
have.
There are
Yeah,
some we've seen a lot. I mean, it's you logged on to LinkedIn every day and you constantly see people that you have been at an organization for 20 plus years that move to another organization
yeah,
for to strategic growth positions.
yeah,
I am not a title person. People ask me what I do. I tell them I just whatever has to be done for the hour. But you watch people make that transition to really grow companies, and
yeah.
You're seeing that with people positioning for, we've all heard the refi boom coming and we thought we were going to have it. And then the market went the other direction, teased us a little bit. But yeah, I think you're going to see that. I think there's a lot of uncertainty with them, with people. And I think they're quick to jump right now when they kind of feel that it has been tightened because the business, it's got tough. And anyone that's at a level of that's moved around has had to make some compromises to
Yeah.
their compensation plans and benefits and looking for the next opportunity to grow and be out there. So you're going to see a lot more of that, in my opinion. Um, Not so much on the sell side. I think your LOs are sticking with the companies that, and as they really dive into what the value is of what they're looking for.
Yeah. For me, what I've seen is people on the production side, but upper level production moving into, they may be a VP and they're moving into an SVP role at a different company, or they're going to be more involved in strategy, some of those types of things. But that's not the bulk of the people. The bulk of people have been other people that have been transitioning with organizations, whether it be, ops or underwriting or some of those types of things. So it has been definitely broader than just the production side. I feel like, and maybe it's just my friend base, the people that are looking at this point aren't necessarily, they're looking for a long-term move that they feel like will provide stability. But really, honestly, I think the thing they're looking for the most is a specific culture, a culture where they feel like, they're empowered to make decisions. They, have a say in what the organization is going to do and some of those types of
Be,
things,
be
which,
part of the be part of the growth plan, not just a solution. I think that's valuable. I mean, personally, I've worked for Fortune 500 to a family owned business where I'm at today, and I enjoy the environment I'm in right now. I'm able to meet with the ownership and go in our direction, and they back me on decisions we make, and not always the right decision I make, but they back us in it and really focus on the right growth. And then honestly working with a group that is transparent with what the plan is for the company,
yeah,
and willing to be honest with you on where we are as an organization on the financial side to the plans and the growth plan. So I think you're right. I think you see a lot of people go in that direction.
yeah, it seems like the idea, I think it's been a constant change since COVID and after COVID, but it seems like people are seeking out something differently. It no longer is just all about the dollars associated. It's more about a lifestyle for sure. One of the things that came out in just the last couple of days or so, but has been talked about before, was the idea of having someone join. Originally, it was out there as a mortgage czar, came out this round as a national housing director role that would have oversight of all areas of housing, no matter what the agency. So to work with all the agencies and respond to possible gridlock in Congress after the elections are over. Now we're here. So the election time is here today, and we'll know, in the next couple of days, week, whatever it is, kind of what is going to go on with that. And I think, we could see some immediate change. What do you think about like adding in this extra layer of someone involved in housing?
You know, it, it sounds good on paper, but reality is everybody going to play nice in the sandbox?
Yeah.
You already see it with discrepancies even between Freddie and Fannie on some of their guidelines interpretations, and then you've got FHA, VA, USDA. I I I think it sounds good on paper. I don't know how you realistically do it because it's a matter of FHA is administered managed HUD, obviously. Then you have the FFHA over the agencies. You got Jenny May in the picture. So I think it gets a very complicated position. Uh, and kind of, think back to CFPB days. Wasn't that what they were trying to do? Is have one central organization mandate it all, and we see how that's turned out.
Yeah.
Depends on the administration and what they're wanting to be their hot button. You know, uh, right now the hot button is that you're seeing with enforcement actions is HMDA and redlining and the stories coming out
Yeah.
big
And
stories
fines and
and big
fines. They're
fines.
fining all kinds of people
And
related to that.
I
Yeah.
don't think anyone's doing it on purpose. It's a reality of
Yeah.
you as a lender are lending and certain markets have higher defaults, so you have to take that into account. I don't think anyone is doing anything on purpose. You
Yeah.
know,
I would say highly unlikely too. I think I mean, every industry has, the bad actors that are in the marketplace, but we've been in the spot that we've been in for long enough that I feel like a lot of those companies, as you referenced before, have kind of been worked out of our space.
yeah.
I don't feel like there's a lot of that going on. I do believe that if people are doing that, they should pay the consequences. But I think a lot of the ones that I've seen, it seems like it's unintentional, and just kind of speaks to the point of people really need to understand their data in our business at this part. So if it's not something that you're looking at in your organization, you could kind of get off guard. Is that kind of how you feel about that?
I agree. If you haven't been, I think that's a key component. I think they have made a statement with the recent things that they did to some of our friends in the business and big fines of know your data. What are you originating? Do you have a diverse portfolio? Are you lending to everybody that's out there?
Yeah,
You got to pay attention to your data. I know as a company, we're internally are revisiting some of our processes, just to be able to make sure we are doing that correctly. Uh, but it's a constant change of maintaining that data.
yeah,
On us as lenders, we get it from both sides. It's oh, more people need to buy homes. Well, why'd you do these loans? They're going into default, and
yeah,
so it's that fine line that you have to do it as a lender just to. And the key is consistent. If you have a policy, you have to do it. And if you do your policy and you stick to it, you will be safe, in my opinion, 99% of the time. You just got to be careful when you make them exceptions.
yeah. Yeah, I would have to say I think that that is true. Having a policy, following it, being consistent with it. There are lots of people in the industry out there that have data sources that can help you with that as well. So it, may involve, doing something that you haven't done in the past to kind of track what you're doing. I think a lot of it, though, is just paying more attention. I do think the one thing that we're going to see in 2025, we started a compliance working group this year. It had been asked for a long time. We finally just decided we just need to do this for our membership. And I think you're going to see a lot of focus on compliance and risk as things maybe ratchet up a little bit in volume, maybe more so than in the past.
And I would ask the audience, I mean, when you've got recent, state audits or whatever audits coming in, I know we have seen a focus on, honestly, it makes you kind of giggle, the adverse action process. We've seen that in some of our requests versus, well, how many loans did you decline? How'd you do it? So I'm curious if anyone else has seen that to where they're really more focusing on that piece, then obviously they're going to focus on the quality of the loans. But I think that's an interesting piece that we've seen recently pop up.
Yeah. So in the comments at MBA, the attorney who represented Fairway said the regulator personally disliked someone there and massaged the numbers to create a violation. I sure hope that that really didn't happen, but um, I
Yeah.
guess one never knows, but I would like to think that things like that didn't happen, but I also am a very realistic person and understand um you know that they do. Bernard is on with us today. Bernard is usually on with us. I always appreciate him being on here. He just looked at Fairway's 2024 data in Birmingham. 5% of their loans were in MMCTs. Um,
Yeah.
so I don't know what that means because I'm not in the day to day, but
Majority
majority
minority.
minority census tracts. Thank you, Bernard. Thank you for always educating me. Um, Bernard and Laird are people that definitely have helped a lot of our membership with some of that data to help them look at their process as well. Um,
Watch. Yeah, you got to watch it now more than ever.
yeah, yeah. Obviously, the real estate market is like I don't know if confused is the right word right now, but there are lots of things going on. People are talking a lot about affordability. That was that was something that was said, I think, over and over at MBA. You know, Fed can cut rates, but mortgage rates have still kind of maybe stayed a little bit static because that cut was already included.
Yeah.
Um,
It's been priced out for a while, and even what they're talking about is already in the price. It's we got to get good data points. The jobs reports that are coming out, and then corrections and unemployment. It's really hard to predict. I don't think, honestly, we're getting any real data points that are 100% accurate till a couple weeks after they're posted. Uh, Scott put in the comments, recent state audit focused on MLS, MCR, and financials in that report. Recent more focused was QC vendor and disaster recoveries. I could tell you, I could vouch on that more. We went through one a couple years ago to the point to we had to we literally had to just throw our old QC quality control vendor away and hire a new one to get compliant. And it was, it was a big challenge. They are really focused, and honestly, disaster recovery and NPI protection is key.
yeah.
And with as many of employees are working remote now, they're wanting to be able to see that if you term an employee at let's say it's 121 Central by 121 in 30 seconds, they can't access anything. And so I think that is a factor that the industry is dealing with the still a lot of our business working remote and protecting NPI. I mean, I'm sure everybody on this call has worked in a Starbucks Wi-Fi or worked at a hotel. If you were at the
Yep.
MBA or whatever, and if you're not using a VPN, you're at risk. The
Mhm.
reality of it, but it's a tough deal to enforce. But
Yeah, I mean, especially with the work environment that we have. I mean, most people haven't mandated people coming back into work 5 days a week. So there's a chance at least one day a week that people are out there, working in a different type of public environment. Scott also put in their business continuity planning as well. I would say that we've heard that from other people that extra protection of what could happen when and if something happens is something that people have been talking about a little bit. Um, Obviously, people home ownership is still something that kind of remains the ideal for a lot of people, a lot of families. Um, but rentals are out there in a lot of different places. I would love to hear from you, kind of like in your market, what are you seeing like rentals versus purchasing? Obviously, affordability is an issue, but is it less expensive where you're at to rent versus own in
that's
like
really where we're
a
at.
dollars to dollars?
I'm in the Dallas-Fort Worth Metroplex, so renting is extremely expensive. We are seeing some pockets actually for the first time see a decrease. Uh, but it is a real factor. But I think one of the biggest challenges you have with rentals or affordability is all the houses that are affordable are being purchased by investors very quickly.
Yeah.
Uh, I read something in one of the counties that 50% of the rentals were owned by a corporation, not even individuals. So
Yeah.
there's a lot of these first time home buyer houses that are out there that price point 300 and less that they're not even getting an opportunity to bid on because the investors are coming in paying cash and putting them on the market to rent. So I
Yeah.
think that's a piece that is a challenge with that.
Yeah, the other thing that I'm seeing here, which I just found out about another one this morning from one of my neighbors who was in line while voting, is my development or my piece of the development that I'm in is about 3 years old. I moved in here 2 years ago, so you start to see the transition of people, in and out of the neighborhood. They bought new and now they're moving on. Is people keeping the house that they're in and renting. And so I now know of three in this little area in this subdivision that is what what is happening with them. So I think there's
Yeah.
people are wanting to wait and see what happens and see if it still remains a seller's market. And for us here, it's probably weather too, part of it. They're going to rent for a while until we get back into that spring market. Because people don't, people hate to move at this time of year in the Twin Cities. You never know what the weather is going to be. So, I think there's some of that as well. I'm going to go back though to something that we used to talk about and laugh about, and we still talk about it, is the Swerbinsky plan. Rich, when he was here, had this whole plan about how to get investors to move on those properties and how to get them out of their business. I still think it's valid that some of that needs to happen in order, um, in order to free things up a little bit.
Yeah.
Um,
Well, you talk affordability. I mean, I think a topic that is the number one that no matter what happens over tonight or the next few days is, we've talked about this homeowners insurance. The Fannie Freddie are not being 100% clear what they want for replacement all the time. And we've personally called them a handful of times, and I think we get different answers every time we call sometimes. But I mean, I think the last stat is you're looking at a 40 to 50% increase over the last 5 years of insurance. And unfortunately, people are not making that in wage increases. I think the insurance needs to be completely reviewed. I got my auto insurance renewal this past week, and I about fell out of my chair. And I'm like, this makes 0 sense. Why it went up 26%? And
yeah, and my guess is you don't have like a new male 16-year-old in your house or
no,
anything like that
no,
going on. It's just an increase.
it's just an increase, nothing new on the record. So then you're forced to reshop it, which takes people time to do. But I think the homeowners insurance is going to be a big factor in 2025 for us to really visit. Look what happened to Florida and the Carolinas. I mean, the cost to that is going to be ridiculous. I mean, and
Yeah.
they're going to pay. I mean,
Yeah. We were talking on the show a couple of weeks ago. For those of you who are on, sorry that this is a repeat, but we were talking on the show, and one of the things that is out there is like, I can't remember what they called it, but it was like um, Social Security for disaster relief. Essentially, it was um, for every closing that happened, the idea of for every closing that happened in the United States of collecting dollars and putting it into a fund to help cover some of the things that were going on. And, it's like number one, I think like just like adding a housing czar, or whatever they want to call you them, it's added expense. And then I want to know how effective that's going to be. This would be kind of in that similar vein. It's like by doing that, number one, it's almost like, are you penalizing people that live in places that aren't going to have some of those situations happen in order to cover people that are always going to rebuild in the places that they always do. And I just can't imagine that flying just because of that, if nothing else. And then the other issue is okay, if we have this big, pool, how is that managed? Who's managing it? How effective is that? And is
yeah,
there a better way of doing this? What do you think about that idea?
yeah. Who would manage it? And I think a lot of people in the state call we already do by paying our high insurance premiums and everything else we're paying. But no, I think you're right. It's kind of like there's a health insurance. That's that whole concept that everybody pays in and it's a shared. I forgot what it was called, but uh yeah, that who do you administrate it? And then anytime you do anything like that, and I've been part of local trade groups on the board of directors and just the politics with anything doing with money is always fun. Who administer, who's going to approve the payouts? Is it, did
Yeah.
Bobby get the same deal as Sue and Mike versus Tom? And
Yeah.
yeah,
Yeah. I thought it was interesting too, because I mean, I always, maybe it's because I was in sales for most of my career. I always look at it from a sales perspective as well and how they're, trying to talk about something. If I were to choose one thing to compare it to and you were wanting success with it, I'm pretty sure that I probably wouldn't have called it the Social Security for
yeah,
disaster relief, because we all know, and I'm more concerned about it now than ever because I'm heading into that range, of that. It's like I don't think I probably would have referenced that as a way to successfully launch something or get people to buy into it. But that's just how my crazy
yeah.
my crazy mind works. Last thing I think I would love to talk with you about today, because I feel like this is something that you are just so passionate about. It came out that it's cautiously optimistic from Representative Torres about the passage of the trigger leads bill this past week. Um, there is still the argument out there that it's helpful for consumers. I'm not so sure about that myself personally. I don't want 142 pieces of mail and or phone calls and or anything like that. What do you think the chances are that we're going to see something pass there that is
Uh,
helpful to
Slim to none.
consumers?
Slim to none. And here's why is you've got very big lenders that they're probably 60% of the business comes from trigger leads that have big pocketbooks. Now we all agree it needs to change. I helped a friend out with a loan. We did her application and she literally sent me a screenshot within 20 minutes, had 26 text messages.
Oh
And
my gosh.
luckily, the FTC is changing the text messaging rules. I don't
Yes.
know the details on that. That's above my pay grade. I don't mess with that piece of our rules.
April 2025,
Uh,
actually. Yeah.
I think there will be some changes to, to give a consumer the opportunity to opt out and streamline that process. I mean, a lot of our staff does the opt-out pre-screening before they're pulling credit. We've utilized the soft pulls with our credit agencies, and then I hope none of them are on the call. They're going to be mad at me. But then they all raise the price of their soft pulls. So what was a cost savings really is not now.
Yeah.
I think there's got to be a fine line. Is it ever going to be 100% eliminated? I honestly don't think so.
Yeah.
MBA struggled with that because they have members that live and die off of trigger leads. Let's call it what it
Yes.
is. But so that's going to be an interesting. And then as anything that goes through DC, they want to put 23, 22 other things tied to that don't even affect it. So
Yeah. I
we
guess
all
we'll
need it to
see.
change. Yes,
Guess we'll
but
see what happens. I'm hoping that instead of an opt out, they do a you have to opt in before
yeah,
people can do it. I like the idea of an opt in better than an opt out, just
yeah. The
personally.
credit group should send you a once a year a survey. Either you opt in or you're going to opt out. If you don't fill it out, then maybe they're opt in just to make them do it.
Yeah.
But it's definitely a problem, but I don't see it ever changing at the federal law level because there are companies who built their business around buying trigger leads and doing loans like that. But that's where they're getting their business. And not saying it's right or wrong, but it's a reality that's out there.
Yep. Well, the adventure starts this afternoon. We're all going to kind of sit back and watch and see what happens in the next couple of days.
Yeah.
And I appreciate you being on here. We are at the bottom of the hour already, which it always goes so fast. Thank you for being in the spirit of election day and wearing your flag shirt. I super appreciate that. It is always fun to talk with you and to talk with your team. So appreciate you doing this. I am out of the office next Tuesday. And so next Tuesday, y'all get a treat. Ashley Alexander will be doing this call with some of our lender members that are in our network. So make sure you hop on here when I'm out of the office on a Tuesday and support Ashley as well as you can by popping things into the chat. Can't wait to see you when I get back. Thanks, everybody. Thanks, Kelly.
Thanks. Have a
Appreciate
great
you.
day, guys.
Yep. Bye.